As a small business owner in this economy, finding funding for your business can be difficult. Traditional bank loans are hard to get without great credit and a business that's already bringing in revenue. Grants are great because you don't have to pay them back, but the competition for grant dollars make them difficult to win, especially if your business isn't a nonprofit. If this has been the case for you, you may want to consider a microloan to fund your business. In this video, we'll talk about what a microloan is, why it's easier to get business funding through a microloan, and we'll also look at 3 microlender websites that provide this option to small business owners. Stay tuned. Hey everybody, and welcome back to the channel. This is Tasha with West Financial Services, LLC, where we provide tax strategies, business services, and financial education to help you achieve your economic goals and live without financial limitations. In today's video, we'll talk about business microloans as alternatives to traditional bank loans and look at 3 companies that provide microloan funding for small businesses who are not candidates for a traditional bank loan. Let's get started. Microloans are very small, short-term loans extended to self-employed individuals, new startups, or young businesses. Microloan lenders are organizations that lend out small amounts of money, anywhere from $500 up to $50,000. They help entrepreneurs who may have challenges securing funding from more traditional financial institutions like banks or with credit cards. Many microlenders are mission focused, so making a profit is not their main objectives. Some offer loans from government or nonprofit programs geared toward helping specific categories or types of borrowers, such as women or minority-owned small businesses. The Small Business Administration, or the SBA, also provides funds to some of these lenders that have expertise in microlending. So before we look at some companies and organizations that you may want to investigate if you're considering a microloan for your business, let's talk about some of the advantages and disadvantages of microloans. Some advantages of microloans are they're easier to qualify for. Microloans typically are easier to qualify for than traditional loans and traditional lines of credit. Credit requirements are not as strict, and loan seekers don't have to show as much time in business. Another advantage is speed. The time from application to funding is not as long with a microloan as it is with a traditional bank loan. A bank loan can take up to 6 weeks or more, where a microloan can be funded in as little as 24 hours. A third advantage is that multiple uses of the funding is allowed. Microloans can be used for a variety of reasons, including the purchase of working capital, startup funding, leasing commercial space, hiring employees, and paying for equipment. Some disadvantages of microloans are they come in smaller loan amounts. Microloans can range anywhere from $500 to $50,000. According to the SBA, or the Small Business Administration, the average microloan is about $14,000. Another disadvantage of microloans is the high interest rates. Because the funding requirements are more lenient, microloans can be considered much more riskier from the lender's perspective. With higher risk, it's common to see a higher interest rate on the loan. A third disadvantage of the microloan is the short repayment time. Microloan payback time frames can be as little as 4 months, not over the course of years like with a traditional bank loan. Now let's look at 3 well-known microlenders. Now, keep in mind that there are a great number of microlenders out there, and you should definitely do your research before doing business with any lender. But for the purposes of this video, we're going to look a little more closely at Axion Opportunity Fund, Kiva, and Uplift Capital. So first up is Axion Opportunity Fund. When we go to their website, you'll be able to see that they are a not-for-profit organization. They offer loans as well as grants throughout the year. And as you can see here, they offer loans in amounts from $5,000 up to $100,000. So they even go above and beyond that $50,000 range that would be considered a microloan. They advertise that their interest rates are as low as 5.99%. So keep in mind that that would be the minimum interest rate that you would be receiving if you were approved for a loan from Axion Opportunity Fund. And they also offer programs and coaching. So what you're going to find with many of the lenders that we look at is they have programs and coaching in place, mentorships, some type of education, either financial or business education for their loan recipients. And so looking at this page, what makes them different? Again, they do tout that they are a nonprofit lender. So what that means is they charge interest, for instance, but they do not take profit on that interest. They reinvest it back into the company so that they can provide loans and grants for even more people or more businesses. They customize their loans and repayment terms. And they say that they support anyone, no matter what your credit score. So it looks like they really look at the business as an individual business and look at you as an individual borrower and make a decision based on that. You're able to apply for the loan online. Once you apply online, they provide you with different offers, including different term lengths for the repayment and different interest rate options. And then you finalize the loan. Next up is Kiva. And Kiva is a little bit different from the traditional lender. They're actually a lot different. Kiva is more of a crowdfunding platform. And so when you go onto Kiva's website, you're going to have the option to go into the website either as a lender or as a borrower. So if you're looking for that microloan, you would go under the borrower option. And just a quick breakdown of the overall journey of a Kiva loan. As a borrower, of course, you would apply for the loan, and then the loan goes through an underwriting and approval process. And so I have been on Kiva's website and read that they would also ask for you to solicit donations or solicit support from family and friends during that crowdfunding process. Next, the loan is put onto the Kiva platform for lenders to support. And so lenders are just everyday people like you and I. It could be other business owners. But if your grant is underwritten, then that means it is backed by a bank. So it is funded by a bank. The people who are lending on the platform are basically helping you to pay that loan back to the bank, if that makes sense. And then you and the people who are helping you repay the loan on the platform pay the loan back. And it's as simple as that. So guys, when you have some time, go over and check out Kiva. I mean, these loans, the great thing about them is that they are 0% interest. So you pay back only what you borrow. The final microlender we'll be looking at in this video is Uplift Capital. So when you navigate to the Uplift Capital website, it looks a lot like the traditional lender websites in that, number one, they are not a nonprofit. And so you're going to see definitely a difference in the interest rates when you go to apply for these loans. But let's go ahead and take a look at their website. The first thing that we want to look at is how they determine whether or not you are eligible, or what factors goes into determining eligibility for the loans. And you can see here, and you'll see when you go and do your research on the website, that there are many things that go into it. Not only your personal credit scores, but also the business credit scores in some cases, the number of times that you've had non-sufficient funds, is your business seasonal, your payment history as far as your business goes, if you have any current trade lines open, the type of business entity you have, so whether you have a sole proprietorship, an LLC, or corporation. So there are many different factors that go into determining, number one, whether or not you're eligible, and number two, determining your interest rate. However, do not let any of these factors discourage you from at least applying. So with Uplift Capital, they have different tiers of loans. And so you can see here, they have the starter tier, the standard tier, premier tier, and premier plus. And so this program is its direct lending program, meaning you would be borrowing directly from Uplift Capital. They also have a business funding marketplace where you would be borrowing from their partners. So they have a conglomerate of partners that provide many different types of loans, and we're going to look at those shortly. But right now, let's go over this direct lending program. And so you can see here with the starter program, it's anywhere from $8,000 to $30,000 borrowed. The term for repayment is 2 to 5 months. So meaning, depending on how much you borrowed, you need to be prepared to pay that amount back in 2 to 5 months. The rate here, you see here, it's 1.40. That is not an interest rate. That is what's called a factor rate. And so with the factor rate, what happens is they take the amount that you borrowed, multiply it by the factor rate, giving you a total amount that you would be repaying. And so if you took out a loan of the minimum $8,000 here for this starter plan, your factor rate is 1.40, meaning you would have to repay not only that $8,000, but also an additional $3,200. And so you really need to consider that when you look at these type loans, especially with the direct lending program. And they show here that you can renew the loan upon repayment. And you can see here the difference between the standard program and the starter program basically is the amount that you can borrow, the repayment terms, and the factor rates. And you're going to see those same differences as you move up in the different tiers. There are different amounts available to be borrowed. The repayment terms are different, and the factor rate is different. And so again, you're definitely going to want to look at all of the options that you have when you are looking to borrow with this lender. Let's look over at the business funding marketplace, because again, that is a different program. Uplift Capital does work with several different partners that provide many different types of financing. So not just the traditional cash financing. And so you can see here all these different types of programs that your business may be eligible for: merchant cash advances. You may be eligible for a line of credit. Of course, they have the traditional bank loans as well that you can access. However, recall that, with the traditional bank loans, they are more difficult to qualify for. In addition, they have this 401k business financing, and I had never heard of this until I was researching this website. So, with this 401k business financing program, you can leverage your 401k funds to borrow monies to advance your business. The only thing would be that you would need to be employed. And so this is perfect for those who are working as W-2 employees and they're running their business on the side. The great thing about this program is that the loan repayment is repaid with 0% interest. And so they also have these other disaster relief loans, and that is through the SBA. You can see here they have SBA loans available, as well as equipment and invoice financing. So guys, whether it's a traditional bank loan, grants, or microloans like we've discussed today, you're going to need to put some time and energy into researching which is going to work best for you and your business. But no matter what you do, don't give up on your pursuit of funding for your business. Beneath this video, I'm going to put the website links for Axion Opportunity Fund, Kiva, and Uplift Capital, along with several other small business lenders. And if you found this video helpful, please like and share it so we can help others to get the funding they need for their businesses. Also, comment below and let me know what video topics you'd like to see in the future to help you start, run, and expand your business. As always, thanks for watching, and I'll see you in the next video.